Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to continue our coverage of the massive dump that happened on the Bitcoin and also the stock market charts. And we do see that what I was describing yesterday in the crypto market is now coming to bear, which is that crypto had to come to terms with the drop in the market in terms of potential devaluations. And so while the stock market got it and was blood red yesterday, crypto just had way too much green on the charts. And so this is a little bit of a delayed reaction as the crypto market is perhaps a little bit less sophisticated with some of the bigger picture macroeconomics that's going on here, which of course is driving stocks to the downside. And stocks having been driven down so hard yesterday. In fact, one of the most intense drives down in the last, I don't know, maybe decade or something. They are getting a little bit of a pity bounce today, just here or there on some of these assets. But overall, the red continues, and so it just not a fun week for crypto or stocks. Of course, we did get that PPI data, which in terms of priority here, the PPI is a little bit, delayed compared to some of the other data. And so we already had the CPI yesterday, which was pretty bad. And so that's already being built into the stock market right now as prices go down. Basically, the next hit is waiting for Jerome Powell's decision, the Federal Reserve's decision on September 21st. And so this PPI data was always going to be just a nothing burger no matter what, because the key issue here was that shocking doubling, all right, that shocking doubling of inflation on the core CPI data. Of course, most of the other data was just nominal. There was a significant reevaluation of the year-on-year expectation, right, from 8% to 8.3, and that was very harsh. It just gave us deja vu of the previous month, assessment. And then, of course, the core CPI coming in much hotter than expected and not nominally different from the last measure, but in fact significantly hotter. Again, like this just does not bode well for inflation and does suggest that Jerome Powell will have to increase interest rates higher. The market is starting to consider, instead of the debate between 50 basis points or 100 basis points, it's now considering between 75 basis points and 100 basis points. And so previously 50 versus 75, and now 75 versus 100, with about 30% of the market thinking that the Federal Reserve will go with 100 basis points. If the Federal Reserve goes with 100 basis points on the 21st and those proportions stay the same, then the stock market will tank. It will absolutely plunge down. If, however, the Federal Reserve, does increase by 75 basis points only, and I say only, kind of biting my tongue, because of course, 75 basis points is the high end that we were previously considering before we got that CPI data on Tuesday. And so now we're talking about the high end as being the low end, which just shows you just how much the markets got shocked by this. And then, of course, we are also having the possibility of an additional 50 basis points in December, when previously that was not on the table. So, guys, we'll be keeping abreast of this and keeping you up to date. You do see this merge timer in the corner window here. That's because we are just about to have the merge on Ethereum, and we just want to see if anything happens to price. Well, congratulations. Happy merge, okay? Like we just got the merge, and nothing is happening, guys. Nothing is happening, but you can see that the merge is complete, more or less complete here. And so what we'll be looking for is if there's any type of response in price. And guys, I don't know about you, but again, I'm still seeing a bit of a head and shoulders on this chart. I am seeing Ethereum underneath the momentum levels that it needs to be at in order to be, reasonably bullish. Unless we get just a massive spring up here, which we are getting some buy pressure. Look at this. Look at that. You see that buy pressure? Wow, that was an interesting pump there, right? I mean, right at the close of the merge. Look at this. Look at this candle, right? So definitely some interest. Definitely some interest there. Now, can we engulf this previous engulfing red candle on the 30-minute here? Let's go to the 15-minute, just see what we're looking at. Let's go to the 5-minute. Let's go to the 1-minute. Heck, okay. Let's just take a look at what's going on here. Maybe turn off our EMAs. Just look at the raw candles. And you do see just some retracing here. Trying to fill in that naked candle. A little bit of bearish divergence on the MACD on the 1-minute there. Let's look at the daily. Daily also has that MACD bearish divergence. We did get that to play out pretty nicely and are finding support here on the neckline of this, kind of macro structure being put in here. It's not really macro structure, it's more of a local structure coming off that falling wedge, which did have a target to $2,000. All right, and then we had this kind of small formation here, which also had a move potentially to $2,000. So we had some confluence for the potential for $2,000. I think those of you who use various patterns, right? Various harmonics. You probably also have a harmonic that takes you to $2,000. So that's like triple, that's kind of triple confluence that $2,000 was supposed to be hit. But what are we seeing? We're actually seeing profit taking underneath the weekly 21 EMA on Ethereum, and we've actually broken down below Ethereum's daily momentum zones. Okay, so we basically have our Stokes is pointed down, our MACD has the potential for continuation to the downside because we've totally lost the MACD even, okay? Like the Stokes, yeah, that can get reset, but the MACD, losing the MACD, that's not good, right? That's not good on the daily. So this is implying more downside, and with that bearish divergence on the MACD, it just doesn't feel good. Let's look at the RSI. On the RSI, if we go to the 2-week, I was pointing this out in a previous episode about macro bottoms, was looking at Bitcoin, but the same thing is playing out on Ethereum, right? We have these falling wedges which have a 70% chance to break to the upside. But one thing about these wedges, you can't be 100% sure, where the bottom is until you get a confirmation over these white EMA lines, okay? See this white line that runs through it, right? You got to get on top of that and kind of bounce off of it, right? Just like right here. Let me put some type of a vertical line on that, just so I showed this on Bitcoin, but let's take a look at it on Ethereum. Okay, see this vertical line I've got here? Boom, absolute bottom on Ethereum, which then turned into an uptrend. You just bought here. I mean, maybe you didn't get the Pico bottom. Okay, but that's just theory, right? This is confirmation. Okay, so let's go back to our formation that I was teaching about, right? We could have had a theory, right? We could have had a theory that this was the bottom, or that this was the bottom, or that this was the bottom. The key point was, we had a maximum top on our wedge, and then we kind of got a point in the bearish control zone on the 2-week, right? And so let me put this is our theory, okay? This is our theory. And then let me make this one thicker because it's confirmation. So again, guys, like we can't just deal with, you know, I'm calling it's going up. I'm calling it's going down. You know, no. We have probabilities, right? That have conditions. The condition is going from this, this basically historical high area, right? And then coming all the way down to the bearish control zone, right? Curving the EMA, curving the bottom, kind of getting a nice curve at the bottom there, getting a, kind of a higher, a higher low. This is a 2 week, so it's pretty significant to get a higher low there, right? So we could even put it here, right? But let's just because we can draw out this wedge, like we can just hypothesize the point of the wedge as the low, right? Let's say this price action didn't exist. We could hypothesize that right there is going to be the low. Let's look at the chart. Wow, that was the exact bottom of the market for Ethereum in the last cycle, 2018. But if this thing could have gone lower. This thing could have gone to zero. This thing could have failed as a project. Who knows what could have happened, right? And so if you wanted confirmation, you would have been an intelligent person to wait for the confirmation, right? To wait for the confirmation on that cross, and boom, just it's all been gravy after that. Okay, this is what I taught you guys. Okay, this is what I taught you guys for Bitcoin. I'm showing it to you on Ethereum because we have the merge. I just want to show you this principle that I taught you for Bitcoin, right? It also applies to Ethereum, okay? Like, this is trading, okay? So I have a hypothesis, so I draw out my hypothesis. I have conditions that need to be met, right? In order for me to just like, basically have my first kind of go signal. You know how we talk about like take profit 1, take profit 2, right? You know how we have like a DCA1, DCA2 point, right? Like you always have kind of like some backup ideas, right? These type of things, right? This is our like DCA1, okay? Like if you have a hypothesis that this is the bottom of the market could come at the, at the bottom of this wedge, as long as we're inside this bearish control zone, on the 2 week, as long as we have this pattern playing out with a 70% chance to break to the upside, then that could be a DCA1. And then if you want to be a little bit more conservative and say like, okay, well, I want a DCA2, right? Daily cost averaging, DCA, right? Just buying a little bit. You don't put your whole bag into it. Just buy a little bit. So that's your number 1 buy spot, and this is your number 2 buy spot, right? On the confirmation. Then you just basically bought like basically the 2 best parts of the market to buy, right? Before we just like went. Okay? And so what do we see happening right now, right? Because this is a merge special day, right? We're all celebrating the merge today, right? Like hopefully it's not like some catastrophic, thing that just takes down crypto, right? Hopefully it's not some CIA plot or something like this, right? But short of that, right? Look, we've got a point down here. I mean, this could be the bottom. Everyone's trying to talk like this was the bottom. Here, let me show you, okay? Everyone's trying to talk like this was the bottom. But I have my hypothesis, okay? I have my wedge. This is what I used in the last cycle when I was looking at bottoms and tops, okay? This is what I developed for me. I don't know what other people are using, okay? My friend Crypto Reda like showed me how he uses RSIs. It's a little bit different, but this is my style, okay? And so like a lot of people, they think like this was the bottom right here, and it could be. It could very well be. Maybe we're just gonna be on top of this wedge from now on. But I've seen this thing happen in the past where, it drops down and then it gets on top and then it like leans all the way over, right? We start building up divergences and things and just various indicators. And so I'm just wondering if we're going to do that again and if we have the chance to make another drop. This thing hasn't rounded out yet. We're not on top. We're not on top of this white EMA line yet, right? So I don't have any confirmation. But let's go ahead to the chart and see where that just hypothesis is, right? Like, because maybe they're right and maybe I'm wrong, right? Maybe my current idea is just not perfect, right? And so maybe that was the absolute bottom, but it's just the conditions were being, met, right? The conditions were being met. You see, that's in the bearish control zone. In the bearish control zone, came from the top level, right? This kind of like high that was set as a standard. This high, this high, this high, this high, this high, right? So this is like the top zone that we can consider for this theory. That condition was met. And then we met this condition. We also met the condition of the wedge, right? And so our confirmation is going to be if we get over this white EMA, like that's the next thing that I'm looking for. Okay, that's the next one that I'm looking for. And it doesn't mean we can't come back and back test it, but it does mean for this cycle that there's a high probability of that being the bottom. So we are in basically the last 1/3 of this, guys. Like some of you guys asked, like, how do I know it's the last 1/3? Like we're in the last 1/3 of this. What are we gonna do? Make another wedge that goes down? I mean, what do you think? What do you think? Like we're in the last 1/3 of this, guys. And yeah, this thing could travel down to the tip of this thing, or it could just break out. Okay, but like we're in the last 1/3, right? So that's why I can call this a DCA. This a DCA. This could be a DCA because it broke down into the bearish control zone. And that's like part of the pattern, right? It could break down again and do like a double bottom, or it could make a deeper one, right? So we don't know. Like this high is lower than this high, so this low could be lower than this low. And maybe if it had a diagonal trend on it, right? Some type of diagonal trend. Let's make a parallel line here. Yeah, I mean, look, I mean, if we're making parallel lines like that, this area would be a prime subject, a prime target for dropping down here, and I could fidget with some of these lines. Maybe I didn't draw it perfectly, right? Maybe I didn't draw this perfectly. And so maybe this point does actually extend down here. Seems to be pretty on track, right? In fact, if we get really hard rejected right here, like due to the merge or something, right? Like maybe this wedge actually does extend like right down there. And maybe this is just like this thing over here. See what I'm saying? Like maybe this is our actual bottom and it's going to come in 2023 around Marchish, okay? Around February, March, when we have like a deep recession or something, okay? And stocks are just bottoming out, okay? Stocks haven't bottomed out yet. So, that's why I'm open-minded. Like you could make a hypothesis. You could make a hypothesis, and that could be a DCA point. Like somebody could have DCA'd right here too, right? Because there was still a 70% chance you're going to break to the upside. Like that's a pretty deep low to be buying in at, right? Like that, that probably wouldn't have killed you. I mean, well, let's just double check, right? I mean, see, you're buying like one level higher, right? You're buying like, I mean, there was a nice bounce off of that, right? Maybe we're getting a nice bounce and we're just going to come back down, right? Like this could happen, right? So again, like the conditions were basically being met, right? More or less on this right here. But we didn't have confirmation. That's why sometimes it's just smarter to buy the confirmation and not give yourself the headache, right? Of trying to guess, just based on the conditions, okay? But again, we trade on probabilities. 70% chance it's going to break to the upside. We trade on conditions being met. We hit the max zone, right? Confirmed it, right, with a lower high. We basically crossed the midline, came down to the bearish control zone, right? Okay, we're meeting the apex of this wedge. So we have conditions. We have conditions that are being met. And then you can just wait for the confirmation of it. Crossing the EMA. Crossing the EMA on the RSI. You could just wait for that cross, guys. Like you wouldn't want to buy that cross here. You're in the bullish control zone. That's not the conditions being met. So the conditions and the confirmation are both equally important. Okay. And again, like we haven't parsed out this whole wedge. I mean, we might have if it's a little bit truncated, right? If it's a little bit shortened, right? Maybe something like this. We might have. And so that's why this isn't necessarily a bad DCA point. And maybe that's why the market went crazy. Like all these geniuses who do analysis, like the way that I'm doing on this, this work that I'm showing you, like maybe they all FOMOed in and bought Ethereum there because of the same working hypothesis that I have. I have no idea. I make up my own theories, okay? Like this is my idea. If other people are using that, fine. I mean, great, more power to them. But I made this originally, independently, right? Like I'm not reverse engineering things that other people do. Like these are my ideas. I literally just sit in front of my screen. I just press the record button, right, on my software, and I literally just work through these ideas, live, like for you guys. Okay, it gets recorded and then I put it up, right? But if the recording is an hour long, I spent an hour thinking about it. I swear to you guys. Okay, like so this is just an idea, right? Maybe I'm wrong. If anybody sees anything wrong with this, let me know. But guys, like we're in the last one third, right? That's why I think people could just go all in there, right? Like a lot of people just went all in. They said like, wow, this was a pretty good level. This was a pretty good level. And if it does round up, like this is going to be lower than if it rounds up right now, right? Or if it rounds later on, that's probably going to be very similar to that level, right? Because this level right here is pretty much the same as this level over here. I mean, yeah, maybe you don't catch the Pico bottom, but you caught basically the confirmation level just in advance. And so they probably weren't really worried about that. So at these levels, right? At these levels, you don't have to be too worried. You don't have to be like freaked out, right? And that's why people could buy in here. It makes sense, right? It makes sense. That's why we saw that pump on Ethereum. And so guys, I already went over this stuff with Bitcoin, okay? But I'm going over it with Ethereum because it's merge day, right? It's merge day, right? So can we all stop talking about the merge now? Like, can we sell the news? Like that's what I'm waiting for. Like for us to just sell the news because like I'm so bored about hearing about the merge. Like who cares about the merge? Okay, like really, who cares about the merge? Do you care about the merge? I don't care about the merge. Doesn't do anything for me. But you know what it does do? It does make Ethereum a little bit better as an investment overall, and it makes Ethereum better for the environment. And so that can attract more institutional buyers in the next cycle, which means that if you are buying Ethereum, right, that can account for some of this bullishness. If you are buying Ethereum, then in the long run, it might perform well, right? It might perform well because institutions can say they're buying something green, they're buying something environmentally friendly, as opposed to something which takes like hundreds of thousands of GPUs, right? Just burning massive amounts of energy every day, right? And so going from proof of work to proof of stake is a big deal. It allows companies to play the green card, okay? It allows their portfolios to look green as opposed to looking dirty, okay? Right? I mean, and let's like not, skip, skim over the fact that Ethereum is the reason why graphics cards are just so dang expensive, man. Like if you're a gamer, you can't get a graphics card when Ethereum's pumping because like everyone just wants to mine Ethereum. Like that's the thing that they want to mine. That's why Raven coin is pumping, right? That's why Ethereum Classic is pumping, right? Because you can still mine those things. And so if you want something green and you're an investor and you're an institution, you can be proud of owning Ethereum as part of your portfolio now when you talk to your clients, right? And they don't want to hurt the environment for their grandchildren, right? These old guys like trying to make portfolios with financial advisors and buying like Bitcoin and ETH through institutions because they're old rich people. They don't want to destroy the environment for their grandkids, right? And so or maybe they're just more practical. They don't want to be using all that energy that comes from Russia and the Middle East and all that stuff, right? They don't have to be greenies. They could be just, they could be just like nationalist also, right? Like You don't want your national energy going towards like just this stupidity, right? And so, guys, like proof of stake on Ethereum is really important for long-term investors who might be thinking this way. I'm not saying it's right or wrong, right? I mean, obviously, proof of work is more secure, I mean, in my opinion. But, you know, for investors, this might matter to them. And so, hopefully, next cycle, we get a little, bit more of a push because more investors come in and are able to hold Ethereum based upon the green nature of it, right? Guys, let's go ahead and jump over to Bitcoin because I think we can see that, you know, I mean, in my opinion, Ethereum wants to drop, okay? Like, in my opinion, Ethereum wants to drop. Let's look at the 12-hour here. I mean, a little bit of bullish divergence there. 4-hour. It's just I don't trust these lower time frames, okay, guys? I don't trust the lower time frames because like we're working towards September 21st and the Jerome Powell decision, okay? Like if it's 100 basis points, we're gonna get slapped down. If it's 75 basis points, I mean, I don't know. Maybe we go sideways, okay? Something like that. I don't think we're gonna pump to heaven. Oh, maybe crypto could find an excuse for it, And again, like maybe Ethereum could complete its patterns to like its pattern targets, which there's like three of them. Maybe it could complete its pattern targets to like $2,000, right? And like finally get there before it dumps, right? But I mean, this is getting pretty toppy, and there's a CME gap down here at 13,000 ish, right? So come down, Ethereum, and fill your CME gap, and then go bullish, like then skyrocket, right? Like if this was your macro low, fine, come back down, retest it, fill in your CME gap so that you didn't leave anything behind so we don't think you're just going to come back, right? And then go for it. Okay? Don't just go for it and have a gap down here and not retest this area because then I don't believe you. I don't believe that you're being real, okay? Like like a lie. You didn't retest this area. You didn't fill in your CME gap. Like that's a lie. Like you're going to come back down later. Like so in my opinion, Ethereum's coming back down to 1300 eventually, okay? Like I don't know how long it's going to take. This looks pretty sloppy to me. Like it could come down. It's like losing all of these zones. It's lost all of its, it lost everything that it needed for the weekly bullishness. It lost everything that it needed for daily bullishness. I don't know what the heck the merge is doing, but with all that news that Ethereum had, like I'd be selling my Ethereum. Like why wouldn't you sell your Ethereum? Like sell your Ethereum, man. Like it had like a lot of good publicity. Like every day, the news, the financial news that talk about Bitcoin, they also talked about Ethereum, the merge. This economic news, like, and so like this the sales job is over. People bought. Now it's time to sell and take profit, right? Like that's how I see it, right? Buy the rumor, sell the news. Okay, like it seems pretty straightforward to me. Retest these lower areas and then accumulate and then go. That'd be fine by me. Okay. And if it breaks down further because stocks just go to hell, then well, at least we know that like that wasn't the real level. Like it retested it and it failed. Good. At least we know now, right? Because if it just shoots up, then there's always going to be this question mark like when's it going to come back to retest it and is it going to lose it, right? Like it just went too high, guys. So, yeah, let's move over to Bitcoin. So, Bitcoin, I set these three standards during the CPI day, right? Like if we could recover 20,700, then we're going to retain our bullishness. Like we did not do that, right? We did not do that. We totally lost our daily MACD. We totally lost our daily Stokes. Like the daily is gone. The daily is gone. Like like this thing doesn't even turn around until you get to 22,500 now. Like we have to pump all the way to 22,500 just to like put a positive daily spin on this thing, okay? Like we could capture our momentum to the upside, like we could move there, right? Like we're in striking distance of the MACD, but like and so we could move there. But in the context of, and I've been showing you this trend line for so long. I showed it to you on CPI day, right? Rejection, 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 right? Like hard rejection. Not just hard rejection, it broke us under this kind of critical, like Wyckofian diagonal. It's not really Wyckofian. The top part is Wyckofian. But it basically sent us into like a Wyckofian like redistribution, kind of scenario. Okay, like it's not perfect, but just go with me on it. Okay, so like we have a couple levels here, right? Let's just parse this out. Okay, because a lot of people think like Wyckoff is just like BS, like it's just like conspiracy thinking, that kind of stuff. No, no, Bitcoin had a Wyckoff distribution top. That's literally what it had. Okay, accumulation, markup, distribution, markdown. Okay, that was the top of the market. Pretty straightforward, guys. Like that was a Wyckoff market market cycle top. And then what? What was I pointing out? Like for months I was pointing out this, that we had like huge risk in this area. Right? As soon as we get out of here, like this resistance zone, which is going to be huge. There were so many like there's diagonal fibs, okay? There's diagonal fibs based upon like the diagonal trend line that we're on, and this is like one of the major lines, okay? And like that area basically had like two lines crossing over, two or three lines crossing over. It was just like you're done, man. Like if you get to this point, like just cash out. And yeah, Wyckoff redistribution schematic. Okay, like it's identical. It's identical. That's what happened. Wyckoff redistribution. Just some type of consolidation, some type of temporary, mean reversion, just letting the EMAs catch back up. This is nothing. Okay, literally nothing. And then what are we doing? Like we're putting in another one of these redistribution schematics. Okay, I mean it's not pretty, right? We have like a crazy retest going on, something very weird due to low liquidity. This is an indication we're getting to the bottom of the market, okay? Because like this was a really low liquidity event, okay? You shouldn't just be able to move markets like that, right? These weird candles. So basically, like, let's zoom in on this. Guys, just pretend this candle never existed and this candle never existed. It's like yin and yang. They just like cancel each other out. Like just forget about it. Like just consider that we just like basically swooped up, okay? Like just pretend this was one price action. Just ignore this. This was garbage. This was literally just market maker garbage, okay? Just forget about it. We retested this diagonal and we failed to get above it. We failed to be above our daily momentum zones. We failed to be in anything that could even catch a weekly like hope and a prayer. And so like what are we doing? We're just redistributing. Like all of that distribution at the top, right? All of the distribution at the top, we're just redistributing it. Like redistributing it, redistributing it, redistributing it again. Okay? And there was a high likelihood that if we recaptured that diagonal and could bust out of this downtrend, like we really had a chance, guys. Like this candle gave us a lot of hope, right? This was like pure, high grade copium and hopium, like just diced up, put in a line, and like we snorted it, okay? Because if you break that, if you have momentum, and everything is about momentum in trading, everything is about momentum in trading. If you have the momentum, you can do it, right? But the CPI just slapped it down like right at a double resistance, triple resistance for Bitcoin, and we just got slapped down. That's all. We lost it, and the market kicked into redistribution mode. And it's happening on stocks also, okay? It's happening on stocks also. It's not like just a Bitcoin thing, okay? It happened on stocks also. So we got redistributed. This could have been like a double bottom, kind of triple bottom type thing, right? And then we broke above our diagonal. We made we took out this area. We took out this middle area, but we weren't able to settle in with daily candles securely there. Just this one candle, a wick to our resistance, and then slapped down, right? Just slap chopped down, right? Just slap chop. Sitting on support right now. That kind of long support that we've been kind of holding in this area. And maybe it works out. Maybe it does work out. But I can't promise anything, right? I can't promise anything. Like, we got rejected. Like, what do you want me to do? Like, we don't have our daily momentum. We don't have even a hope or a prayer, right? The weekly 4. We don't even have the weekly 4, okay? Like, let's go to the weekly. Let me turn off this Wyckoff stuff, or just let me throw it to the side at least. Let's go to the weekly. Let's get our EMAs on. Look at this. Look at this. Just falling to hell. Check back to the 9. We always say we check back to the 9, right? Learned that from my friend Crypto Retta. Like, we always check back to the 9. Totally rejected by our trend line, and now we're underneath the weekly 4 EMA, right? So we're like we're closing underneath the weekly 4. Okay, like we close under the weekly 9, we close under the weekly 4. Like we go down. Like, what does this imply? Down. It implies down, guys. Look at where our 300 MA is. Simple MA. Okay, you see this white line here? I mean, that that looks like a pretty good target to me. That would be a double bottom. And if we break through that, I mean, I don't know where this thing could end up. We look at our trend. Man, need to turn this stuff off. We look at our trend line here, right, to the downside. See if I can get well, let me just draw this out. I mean, this was just beautiful, guys. I mean, it was so beautiful, right? Boost this up a bit. Let's just make this a parallel channel here. Let's go. Just say that this was just fear, like a lot of fear. I mean, we can make a double level just in case, right? Something like this, like just in case. But I mean, if this is our channel, right? And we have some deflection on this dotted line, but then we also have some deflection on this, kind of this line that kind of lines up here, right? Like, what does this look like? I mean, this looks like a nasty drop, guys. It looks like a really, really nasty drop is about to come up. Like, this retest could be like your last chance to get out. Okay, like if you have positions, this could be your last chance to get out. And this thing may just drop. This thing may just drop, just like it did here, just like it did here. Every time we've been at the top of this channel and got like a hard rejection, like it's just been almost vertical down. So what's the bottom of this, right? I told you guys I have a model for 3,400. I don't want to consider it, right? I don't want to consider it. But I mean, look, like this thing could even go to negative 4,000, right? Like, if you just respect this channel, okay? Let's take the middle section, right? Like, that's like that 3,000 area. Just, it would round out, right? And then if you take this long-term diagonal, right? Like this type of thing, then we're talking about that $10,000 area. And if we take these horizontals, then we can see that, 11,000, 14,000, maybe 16,000. There's just lots of ways to look at it, right? It just depends how bad the markets get hit, right? But there's no reason for me to be bullish right now. There's no reason for me to be bullish right now. And yeah, we had that bullish divergence, like on the 4 hour on some of these charts. And so, yeah, like we could be getting like little pumps. I told you, like we can retrace some of our drop down here. Let's go back down to the daily, see, show you what's going on, right? We have this exposed candle right here. And that could reclaim our MACD, but again, like we have to get over that 22,500 in order to get like our real bullishness back, okay, guys? So, I mean, look, we're pumping right now. I mean, we're 20,300, but you know, like we were 20,500 the day before, all right? And we were also 19,600. So, yeah, I mean, this thing could pump, but I just don't know how much I trust this stuff, guys. Like, I don't know how much I trust it. I can't trust any of this stuff below these zones. Let's look at Flux. Actually, let me go back to Bitcoin really quick, and let's just throw on those EMAs on the daily. On the daily, I mean, look, we're just way under the 9 here. We're getting a little bit of support from the 20 MA, but like we're under the 9, the 10 MA, and we're also under the 9 EMA, under the 4 EMA on the daily. Like all of this is so sloppy. It's just I can't be bullish like with this configuration. Like I understand. Like yeah, we tested like this supply zone or whatever, right? Like pin pin precision like retest of this breakout right here, right? Like we retested it perfectly. Like that's a zone like you would want to accumulate in. But with the rest of the market, looking how it does, with the mood of the market, the stock market, like I mean this is good for maybe a trade, but I don't like macro wise, it just feels like it could be like one of these sloppy like spillover moments, right? Which also had bounces, right? Like we had a huge spike up here. Remember this one? Huge spike up. 12% spike up, right? What did we do here? Right? Like let's just count it from here. 16%, 20% spike up, okay? So this one was more intense. But look, same thing happened. Like we lost it all. We lost it all, right? Like 10% drop, right? 10% pump, 10% drop. Then we went sideways. Like, yeah, we did pump a lot. Then later on, a couple days later, we recovered all of that candle that we dropped down, and then we just sloppily fell over. Like, is this what's gonna happen when Jerome Powell comes out and speaks? Like, are we gonna do this? Like the conditions are met for bullishness, but we don't have the confirmation. And the confirmation is going to be Jerome Powell, okay? So like we can have like conditions like potential the potential setup like on these shorter time frames we can have the potential setup, we can have the theory, right? and and we can set conditions like recapturing our MACD or something, like just getting some momentum. But the confirmation is Jerome Powell and the decision by the Federal Reserve on September 21st. That's all you need to know. The CPI data, it broke everything. It broke everything. And now it's all in just like one man's hands, okay? Like that's just how it is. Like and I don't care about these guys who like don't believe in like macro factors or whatever. Like they just think like just trade the chart. Like yeah, of course trade the chart, but the chart is moving with the macro. Like don't be ignorant. Like the CPI doesn't matter, bro. Like the entire market got smashed down by CPI. Who's that guy who said that, man? Who said CPI doesn't matter. Like who was that guy? Jason Pizzeria, man. Jason Pizzino, right? Man, sometimes I think like people make comments like that just because like they don't understand what's going on. They just don't understand. And so they just make fun of other stuff, right? But just understand that like what happened here like is literally what we're setting up for again. Okay? Like we're literally have the same setup for what happened here could happen here, right? And all the indicators, man, I went over this stuff with you. All the indicators like were showing that like we were in one of these type of moments. Okay? And yeah, we busted above the diagonal. Like that's what threw me off and I got super bullish like for one day, right? But I told you all of the indicators looked like this moment. Okay? Where we just like smashed down. And you know what I think it is? I think it's just because there's a spread of time between the CPI data and Jerome Powell's decision. Like that's why I think it may end up being something more like this if we do end up going down. If the Federal Reserve does 100 basis points, probably going to see something like this. If the Federal Reserve does 75 basis points, then maybe we do sideways or even start to work our way back up, okay? Maybe. I mean, we're going to have to assess it at that time. We're going to have to see like what's really going on in the market, okay? But the hopium will be back alive if they raise it just 75 basis points. Because right now the market thinks it's going to be 100 basis points, like 30% of the market thinks it's going to be 100 basis points, and then also an additional 50 basis points in December that wasn't supposed to be there. And so that's like 75 basis points that people weren't expecting, like suddenly on our shoulders, plus the 75 basis points that the market had already thought. So it's like 150 basis points being thrown at us all at once, basically. Okay, that's why the market like got so scared. It's like 150 basis points just being thrown at us like a brick to your head. Okay. Whereas the previous model suggested maybe 50 to 75 basis points. Now we've got this 150 basis point brick just being tossed right at our head, like our temple, right? Is like right in the path of the brick that's flying towards us. And Jerome Powell is the man hurling the brick. Okay. Like he can choose not to throw that, but the guy like looks like he wants to throw the brick at your head, okay? That's why the market is acting how it's acting. Does that make sense? I hope that makes sense. I'm not trying to be like weird or anything. It's just trying to make this like understandable. All right, Flux. That's why things can change in one day, man. Like I can't control like those macro factors. Like and people like Jason who say like the CPI doesn't matter. Like it matters. Like it changed everything. It changed literally everything. Okay? Like I don't care about your levels or whatever. Like it changed everything. If that CPI data had been extremely good, we would have pumped to heaven. Absolutely. We would not have dumped. Like don't be an idiot. Like don't tell your audience like some things that are untrue just because you don't understand it. Man, some of these guys, man, it just frustrates me. Okay. I mean, I'm not the world's best trader or anything. Okay. Like this is a channel for continuous learners. Like we're supposed to just be improving ourselves. But when people pretend they understand things that are bigger picture stuff, it just frustrates me when they don't really understand it at all. Okay. I get it. Like you just prefer to look at charts. Like so then just look at charts. Don't make comments on the macro then, okay? Like if you don't understand the macro, like don't make comments on it. Just look at your charts. Just do your fib level. Just do your fib levels, okay? Like it'll probably play out eventually. Like all of these levels get retested, okay? Like they all eventually get retested someday, okay? But the macro is what's defining how we meander to those points, okay? Like how we walk the path, like that's what the macro is defining. So Flux again, it lost its daily momentum zone, guys. Like it shouldn't be surprising that like it dropped down. You should have taken your profit up here, like when I was saying, always be taking your profit. What I said, just give it time to heal. Like this thing bounced down, and then what? It got an incredible bounce right off of this support zone. See this? See the support? Look at this, like right at my line. See the top of this green zone here, right? This teal zone, like just nice bounce. What was that bounce? Boom, 15% off of this zone. Boom, right? How did we know that that could happen? Because look at all these candles. Boom, right? Smash down. Boom, smash down. What did we expect? If it caught support here, boom, you should get like a 15% play. But we lost our momentum zone already, and this thing's like way overheated, like I was telling you, it has to reset. So of course, like we're not gonna make like an all-time high in the next like bounce. It's probably gonna like meet a little bit of resistance, right? Just it needs time to cool off. You see how it behaves, right? Still bullish, just getting kind of toppy, that's all. It's getting kind of toppy. Let's look at it at the weekly. I mean, look at this thing. Look at this thing. Thunderbolt to heaven, man. Man, Flux, man. I wish I got in on Flux down here, man. Like there was perfect signals too. Like this thing was just telling you it was gonna go. Like it was just screaming, like this is the bottom. Like I'm gonna go. Like all aboard. Like whoever wants to join me, like come with me. And like you just had to be like reading the signals that day, right? I mean, look at this beautiful like tapering on the MACD, right? Like this, I'm on the weekly even, okay? Like the RSI, like just perfect. It's perfect crossing right there. Right, right here at support. Like 1, 2, 3, 4, like supports, right? Historically, where it just like sprang up in the past, like to incredible heights. Like like everything just aligned perfectly for Flux. And if you got in on Flux in that moment, like if you were looking at your indicators at Flux, like down here, and you didn't get in, like you deserve to fail in crypto. Like, like other people deserve your money, right? Because you're not doing anything with it, right? Like this was the perfect opportunity. But now we're overheated, right? Now we've got all these drives. Like maybe we could do one more, something like that. We're in this resistance zone. Like it's a good time to take your profit. Market's looking shaky, right? Like I don't know. Let's go to the 5 day. Let's go to the daily. Yeah, I mean, just really overheated. Like it may work its way back down, okay? Like expanding to the downside. Not done yet. Stokes turned down. It keeps trying to come back up, but it's just overheated here, guys. Like I don't know what else to say, man. Like MACD turning down, right? RSI under the EMA, like just let it cool off, you know? Like you can play little levels, right? Like that support zone right there. You can play little levels if you want. But we're just in the middle of a level right here. Like so there's nothing to do right now. Like just take your profit, guys. You didn't take your profit yet? Like take some profit. Let this thing cool down. CRV, it's just playing around with this wedge some more. Look at this perfect bounce off the bottom of the wedge, okay? Like I didn't put this wedge here for no reason. Like perfect bounce off the bottom of the wedge. Like caught support, like pretty much where you would expect it to catch support. Under its momentum zones on the day, getting suppressed there, just kind of floating in the middle of nowhere on these like different levels that I have. There's kind of this smaller level, like there's a couple like daily levels, right? In between, like it's just bouncing around. You can see, you know, this line might matter, right? It's kind of bouncing between there. So, you know, at the bottom of this wedge is a safe place to go in, and then at the top is a safe place to sell, right? If you just want to play CRV like that. But again, like we're under our daily momentum, like we're not anywhere in anything interesting for weekly. Like we have interesting setups, you know, potentials on the weekly. Let's go to the weekly on the EMAs. You know, we had that, like we're really close to it. Like we can still work our way. Like again, like the here, let's just use the daily Stoke, like 124, 124, and then like honestly, I want to see above like 128. Okay, like above 124, above, you know, and then holding like 128, like I'm more interested. But this is just, I mean, it's not special or anything. Okay, it's not special. Like if we ever come back down to like 70 cents, right? That's going to be really interesting to me. 35 cents. Again, like above $1.30, like this thing can just fly, man. You know, like look at what it did in the past, like above $1.30. Like this thing just flew, right? It dumps hard and it flies hard, like above $1.30, right? This area right here is just in between this mess and this mess. So nothing terrible. Like it could be building a floor or something, but you know, I want to see it just recapture some bullishness, you know, otherwise we're in danger of like dropping down here again. That's the key point. Like that's the key point I'm trying to make here is like we're just in no man's land and like we're in danger of falling down here again, which would be a great level to be, and then maybe we double bottom or something and go, right? Like, but overall, like just really nice attempt by CRV. Like it just keeps trying, it's just getting rejected by this area up here. It just keeps getting rejected, okay? It can't seem to get a hold of any of the EMAs it needs to get a hold of in order to be really bullish. ADA, you know, basically the same principle, okay? Like you guys see what's happening in the market. The only thing is that just ADA has a really interesting structure going on here. Okay, this really kind of like rounded bottom thing going on. Like that's a really nice like rounded bottom, right? That's going on here. Like it feels like it's due for some type of mean reversion to like 68 cents. Like when's ADA gonna get to 68 cents? Like it feels like it's due to get back to like 68 cents. Like that. It's just I just have this nagging feeling like it needs to get there. I mean, of course it can drop down to this 42 cents level or whatever. And it's just like everything else, like in this crazy moment, like we're underneath our daily momentum, right, zone. Like we're not in anything interesting on the weekly, like at all. We're getting rejected from basically everything interesting on the weekly. And so, like, yeah, maybe there's like 4 hour plays or whatever, but you know, I'm not interested in ADA guys unless it's holding securely over 51 cents. Like that's I've said it before, I'll say it again. Like I'm not interested in ADA unless it's holding securely over 51 cents. And then we're going to be targeting like 60 cents and 68 cents is like a stretch goal, right? And then it could just fly from there, guys. Like I mean, you know. And if it drops lower, okay, fine. Fine. But this thing has been destroyed, right? Like we're at the 886 already. Like I didn't even realize that. Like we're at the 886 already. Like some of these coins haven't reached their 886. But not only does ADA have this beautiful like kind of like rounding bottom like going on, it's also at its 886. And I think ADA has some news coming up also, right? Like some type of fork or something like that, right? Something which ETH 2.0, right? Something with which ETH 2.0 has like completely overshadowed, right? Like happy Happy merge day, right? Happy merge day, guys. Yeah, poor Cardano. No one cares about Cardano. I mean, this thing, I mean, it's at its 886 already because it performs terribly. That's why. At least, you know, at least as long as I've been watching it, which has only been really on this downtrend. But it could be a market leader, and look at what it did like in summer. I mean, it was like one of the first like high caps to really go, and it just like really went. So don't dismiss ADA. Like this thing could do something unexpected, okay, guys? Like it could lead the charge, you know, later on. Maybe not right now, but maybe later on. Like just that's why I'm just monitoring it, okay? But I'm just not interested under 51 cents. That's all. Just me personally. If it gets super low, yeah, I'll grab some if it gets lower than where we're at, but like I'm just not interested in it under 51 cents. I want it to hold. I want it to show some bullishness because it's such a bad performer. I could have my money elsewhere. And then Kadena, you know, basically the same thing going on here. Like they're all doing the same stuff, guys. I mean, Kadena is above its a MACD, so that's nice, but it's below that diagonal that it's just been like it's just been frustrating us. Like it's the same boat as Bitcoin. Like I'd love to see it above $1.64. I mean, this isn't actually okay level. I mean, did this thing pump? It's only 3%. Yeah, not significant. You're not missing out on much, okay? Like, I mean, maybe if you grabbed this, like that was a good one. We had a little hypothetical. I didn't buy this one, guys, by the way. Like just truth in advertising. I didn't buy this box, but we had a hypothetical buy zone, like right there. Just a hypothesis that it would come back to retest the breakout of that wedge, and then it pumped 13%. Right? You see this wedge? Right? This little small wedge. We have the big yellow wedge, and then we have this small wedge, and then it broke out, retested both of them, and just flew, guys. Like it just flew. Then it broke down like Bitcoin. So it's just chilling out under that diagonal. I'd love to see it above 160, to be honest. Okay. And then see what it does from there. Zilliqa lost its support, just totally tested the lower levels. Like you guys didn't believe me that like this stuff could like break down and test these lower supports. It's the bottom of the market. Things aren't going to go lower. No, I guarantee you, like some of these assets can go like 20 to 50% lower. And you just saw what Zilliqa did. It dropped today. It dropped 10%, right? Unexpectedly, it dropped 10%. I mean, that means like somebody who held a lot of Zilliqa like thought this thing's going lower, right? We could start seeing that happening to other altcoins, and that's why like sometimes it's just better to like buy confirmations. Like we can all like have a hypothesis of this bottom or that bottom, or have zones or whatever, and just kind of like front run the market. You're gonna get really great positions if you do that. On probably on average in a bull run. But in a downtrend, I mean, unless you're shorting, it's just risky, man. Like sometimes it's just better to buy the confirmation. Use your EMAs, use your RSI. Like that's all you have to use. Like you don't have to make it that complicated, okay? Like these lines over here, that's just my Stokes and like it's just my EMAs, my Stoke and my MACD. Like those are very simple tools, okay? And just seeing that we don't have the momentum on the daily. You saw what can happen. Like you can just drop like to a level lower. That could happen to Kadena. That could happen to ADA. That could happen to CRV. That could happen to Flux. Right? Like as long as you're under those daily momentum levels, like that can easily happen. Like that's why I put these levels here. Like you have to hold on to those things with significant candle closures. And then the weekly is what I'm looking for because if you get into a weekly squeeze, the reason I use the EMAs for these lines is because if you're in a weekly squeeze, it's not easy to break that, guys. A weekly squeeze is like this one right here. Like that had to have been measured, like this one right here. Like this was a weekly squeeze, guys. Like it's not easy to break down from this stuff. That stuff can just skyrocket, okay? Or at least it gives you multiple chances to get out, okay? But this daily stuff, this 4-hour stuff, this like 15-minute stuff, I mean, it's just going to drive you crazy. You're gonna have to check the charts all the time. That's fine if you're a sniper and you know, kind of like high turnover, leveraged guy. But if you're trying to buy positions for like swing trading, right, which is what I do as I'm a swing trader, like that's just going to drive you crazy, right? So you look for those dailies, you look for those weeklies, and if it's not all gelling together, if all the time frames, if all the EMAs, if the RSI, if the MACD, if all this stuff isn't gelling together, then you just don't take the trade. You just say like, oh, it's kind of a mixed day, right? Like I'm under the 9 on the daily. I closed under the 9 on the daily. I'm under the 4 EMA on the daily. Like, why would I take any position long whatsoever? It doesn't matter I'm at support. why like I'm under my daily momentum. I don't have anything on the weekly. Like nothing is gelling together except bearishness. Okay? The dollar, look, man, we were down here when I put that purple line up here. Look, we've just been gravitating to it, okay? Like we're just holding on to it and gravitating to it. I told you that was like the worst case situation for I shouldn't use that because that's a CME gap, but I just told you like that's the worst case situation is that like we filled in the CME gap up here and then we use it as support. That was the worst case situation for the dollar index, and like literally that's what's happening. Like we literally have the worst case situation in the dollar as well as the CPI data. Like that's what's knocking us on our butts. USDT dominance, I mean, maybe a lower high here, but like this thing could skyrocket to the top of the channel. Like it just looks I mean, it could make a pullback, like we could get a little bit of run, but then it can just turn around and just keep going, okay? Like this thing does not look weak. I mean, on the daily, it's turning up actually. So this thing is actually bullish. Look at the MACD. Look at the RSI. Like all of these indications on the daily, like suggest like the USDT dominance is bullish, okay? So I don't care what happens like temporarily, like in one day or like in a part of a day, like this thing can just like keep flying again, okay? Just like the dollar. Like the worst case situation is happening if you're a bull, right? You look at the VIX, like just like this looks bullish, guys. It looks bullish. It looks like the USDT dominance. It looks like it wants to just keep going up. Yeah, I mean it could have a pullback, right? And then we could have an easy trading day maybe tomorrow, right? But it looks like it just wants to keep going, guys. Right? Like, are we gonna do this? Like, are we gonna do like one of these major spikes? Like, I feel it. Like, I feel it in my bones. Like, it's coming up. So, I don't know. Watch this space, I guess. Stocks. Did we look at stocks already? I mean, basically, on stocks, we just have this. Let me turn off these EMAs. I'm sorry, guys. I have so many lines, but I swear I use all of them. Let's go to the 4 hour for this, just to get more detail. There we go. We can kind of get rid of this thing because that was like the most idealistic bullish condition. Now we're just basically kind of playing out the bearish condition right now. Like we could recover this, right? Let's just say that like we recapture this diagonal right here. Like we recapture it just like Bitcoin has a diagonal. Like stocks, this is the this is the S&P 500 mini futures. Like if we recapture that, maybe we could try again. Just we're so far away from it. And again, my line in the sand is 3,800. We break 3,800, like we're going down. We're going down, guys. I think 20%, right, to basically 3,200. Look, I mean, there's a trend line right there, guys. Like, there's a trend line. Where else are we going to go, right? We could find resistance on our way down, but we're probably going to work our way down there. And then maybe we would start bottoming. We have a lot of kind of support and structure in this area, just kind of like structure. Maybe we could build some structure and then go. And then look, that's just like basically the golden pocket. Look at that. It's actually the golden pocket, guys. I didn't even look at the fibs the last time I was talking about that. This is the golden pocket. That'd be totally normal. Like from a macro perspective, it'd be totally normal just to bounce off this stuff. Last time I was showing you how to calculate the way that we could go down, but man, just look at this fib. Like the fib's right there. Like we could do that, you know? And then we got the 0.5 right here, so there could be a little bit of a hang up, You see these kind of like jagged structures that we put in, like maybe a little jagged structure around the 0.5, right? So this is totally doable, and it's just gonna kick the legs out from under crypto if this happens. Like, we're gonna have massive capitulation, guys. Massive capitulation. I'm talking about 20 to 60% declines in crypto, right? Maybe not the coins that have already like met their 886, but coins that haven't, right? Like Bitcoin and Ethereum and some of these other ones. Like they could just get smacked down harder than you could think. Nasdaq 100, pretty much the same thing. Just getting kind of wedged in there. Let's see if I have another NAS. Yeah. So I made this hypothesis, like we could just kind of like snake our way out to the upside. Like if Jerome Powell like does 75 basis points, maybe we could snake our way to the upside and just barely skate by like on this support, on this diagonal support. But if it's 100 basis points and then like they do 50 basis points in December, then of course we're gonna lose this level, guys. We're gonna lose this level. And then where do we go? Like where do we go from there? I mean, it's gonna be a bloodbath. Okay? So, I mean, that's why I get so mad at these guys who say like the CPI data doesn't matter. It's been proven CPI data doesn't matter. No, guys, it's just that the time that the CPI data matters, it takes time for the market to process that stuff. It takes time for the Fed to make decisions. And then the Fed makes decision and it takes more time. Like there's like a chain reaction of stuff that happens on the macro, right? It takes time for people in the market participants to learn and interpret what those things mean and to create new theories of the market in order to understand like what positions they're going to take. It's not like it just happens instantaneously. It's not all driven by like algorithms and bots. There are still human beings that like actually are the owners of that money and they have a say in where their money goes. And so like they're the ones pulling the trigger. It's not like it just automatically happens like on everything across the entire world all at one moment as soon as like the data comes in. But even if it did, like markets got smashed down by the data. So how can you say the CPI doesn't matter? I just don't understand what these people are thinking. Like why teach your audience the wrong thing? Like it matters. It just changed the world, okay? Like the European Union and Japan, like they have a new set of problems because of that CPI data, okay? And they had no idea what it was going to be. They had no idea in advance what it was going to be. So they're facing a new reality, right, this week because of that CPI data. And you're saying like CPI data doesn't matter. Like, okay, Jason Pizzeria, like fine, you know, right? Good trader, but I have no idea what you're talking about on the macro. Okay, like some people are just filling up the space with like disinformation. And it doesn't make sense. Like, fine, use your fib levels. Like, just use your fib levels. Just use your supply and demand zones. Okay, like just use your supply and demand zones and just don't talk about macro. Okay, if you don't understand it. Anyway, guys, that was your alpha for the day. Stay safe and happy trading.